Today, we will do an extremely valuable lesson with the 1000 times tested trading strategy and our best indicator. We will cover everything with top-down analysis. We will master the bias and the market structure. If you're okay, let's begin. Let's check out this quick morning trade practice with Pendle coin, one of the top gainers of the day. What you see here is our very simple indicator called ICT High Time Frame Candles indicator, showing me the multi-time frames at once to observe the price in much better detail. First of all, notice how the price taps multiple imbalances at once: 30 minutes, 45 minutes, and the 1 hour price locations. Also, if you check out the 2 hours chart, you'll notice the dominance of the buyers. Solid, big, green candles in a row also keep taking the previous highs to push the price up. Now, if we open again our low time frames on the left side, such as the 5 minutes time frame in this case, you can clearly see the price action combined with high and low time frames together. Also, this is a very special price level. First of all, it is a natural support and resistance fill-up area, as you can see. However, it is not an ordinary one. It is a specific price level, a masterclass amplifier, the previous day high level. Remember from our masterclass, amplifiers are great boosting points for your entry locations. So, if we can sum all it up, why is this price point very important? First, point of 30 minutes, 45 minutes, and 1 hour imbalance taps from the higher time frames. Second, buyers dominant, if you remember the 2 hours chart. Third, a natural SR fill-up point area. And lastly, the point of PDH, the previous day high amplifier point. All comes together and makes this area a very nice point of interest zone to look for trades. First of all, what is your logical target here? Obviously, the above liquidity point. If a trend wants to keep pushing higher and higher, it needs to take out the upper liquidity points on the go. The rest is simple smart money entry, a classic market structure break with an imbalance. However, in this trade, unfortunately, there is no great reward. Sometimes this happens. We cannot do anything about it. This is like mostly 1.5 hour trade. Because, as you already know, I'm against very tight stop losses. We need at least some cushion, a bit large stop loss for our trades to breathe and move around. What about yo-yo averaging? Imagine that you made your first entry at this logical place, but price did not move up. Instead, it started to crash on you. Next logical area would be this inner SR fill-up with nice imbalance. So overall, this would be a nice zone to create some average price. However, if we look down further, this deeper parabolic liquidity area with imbalance also looks interesting. So it is possible that it would even crash deeper to get more fuel. But in my opinion, this is a very, very large zone. But in my opinion, 2 yo-yo would be enough here. In the worst case, cut the loss and move on. Because if the price keep crashing further and further, it also will mean that sellers are getting dominant over buyers. Remember, averaging does not mean you need to average forever. Maybe in investing you can average a lot, but in trading, there are some points you need to cut the loss. Okay, people, I hope that this lesson was helpful to you. Please take care and have a great luck in the new week. If you have completed the free trading course and feel like you have improved your trading skills and you want to move to the next level in your trading life, my masterclass is ready for you. You'll learn liquidity, inefficiencies, and structure mastery deeply. And we will look at forward and reverse trading with momentum super boxes. You will also learn how to confirm your entries with magic alignment system. You will discover the yo-yo strategy and the rally strategy with one free indicator. If you are interested, you can find the links on my website on the descriptions. Take care, my friends, manage your risks, and stay safe.